Hey, it's Colin Meeks, and welcome to another edition of our podcast. Today, I wanted to talk to you about something that a lot of our clients have a strong interest in the charitable giving department. A lot of our clients are retired, and they are very interested in doing these things called a qualified charitable distribution from their IRA. It's called a QCD for short. It's not a very complicated thing. But what it does is it actually saves taxes on required minimum distributions from your retirement accounts if you do it the right way and give it to a charity that you're interested in. And what I've found over the years is that when meeting with clients, looking at their tax returns, they will not always think charitable contributions through. And what I mean by that is they will just write a check, and the way that tax laws are now, unless you're giving a lot of money, a lot of times it doesn't help you out in the deduction department. Where it does help you is that if you are over 70 and a half years old, and you also are required to take minimum distributions from your retirement accounts, if you do it in the correct way, you can actually save from paying the taxes on that distribution. And I'm talking about the way that laws work right now. It used to be that once you hit age 70 and a half, you had to start taking money from your retirement accounts. Now they've bumped that up to age 73, and it's rising. But if you are 70 and a half years old or older now, and you do have IRAs, and you are taking required minimum distributions, and you're giving to charity, that's your intent, you should check this out. So we have a handy checklist that we're happy to send you, and we'll post it to this podcast. It's called Can I Do a Qualified Charitable Distribution from My IRA? And I'm going to hold it up to the camera here. It gives a little flow chart here that walks you through a bunch of questions. And I'm not going to go through each one of those because it's pretty straightforward and simple. But the gist of how these things work is that you have this IRA, and let's say it's $100,000, and the IRS tells you at age 70, say you're 75 years old, you have to take out a certain percentage of that. Say it's $4,000 a year. The way that works tax-wise now without a qualified charitable distribution is that $4,000 would just be reported to the IRS as income, and you would have to pay whatever your ordinary income tax rate on that $4,000 is, federal, state, and local. Whereas, and let's say you're already giving away a certain amount of income or a certain amount of your money to charity each year, what you can do is you can, instead of having that $4,000 sent to you every year, and you can make this decision on a year-by-year basis. If you have that $4,000 sent directly to a charity, then you don't have to pay tax on it. So you're not going to pay tax on the $4,000. The charity gets the full $4,000 that you're giving. And it's sort of in the IRS's eyes like, hey, it just sort of goes around the bend and you don't have to pay tax on it. So that's how qualified charitable distribution works. It's a very simple process. We do them a lot for our clients. It's just paperwork on our end. You just have to tell us where to send it. You can only give up to the required minimum distribution for that treatment. That's not to say you can't give more to the charity, but in order to qualify for the qualified charitable distribution, you just have to not go over your required minimum distribution and then give the money. If you want to give more, you can make that up from another account. So give it a try. If your advisor's not talking to you about this and you'd like to talk to us about it, we're more than happy to walk you through how it works. Doesn't mean you have to hire us as your advisor. We're just more than happy to give you the information. And you can also download this checklist from our podcast show notes. So that's it. So that's how qualified charitable distributions work. Let us know if you have any questions. Thanks.